Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we bring to you the lowdown of the day's action on the Lal Street. And Indian markets snapped out of their 5-day losing skid to end in the green on Friday, with Nifty managing to close above the key psychological level of 22,000 after spending a session below it. If you'd recall, in the morning we had emphasized that the first course of actions for the bulls will be to close above this 22,000 mark today. And I mean, this is not just a key psychological level, but also it coincides with the 50% retracement of the most recent rally to record high. So going forward, the first level since 22,000 is already conquered. We need to take out we need to take out 22,166 mark, which is nothing but the 61.8% retracement level. But the big one, in my opinion, I think where you can make a case that this correction is over perhaps, is 22,280 to 300 odd levels. Now this is important for multiple reasons, because that's where multiple moving averages are. For example, the 40-hour exponential moving average is somewhere around that 22,287 mark. So 22,280 to 22,300 is very important. Also, it coincides with the 78.6% retracement level of this most recent rally from April's low of 21,777 to the recent record high of 22,794. Also, 22,300 is key because remember, in this week, we closed at around those mark on two sessions, on Tuesday and Wednesday, and on Thursday that was the intraday high. So I think going forward, 22,300 becomes a key resistance zone for the market, and only a break above it could perhaps tilt the market in favor of the bulls. Sensex also ended about 260 points higher today at 72,660 mark, whereas the broader markets outperformed headliners and ended with gains of almost 1%. Nifty mid-cap was up 0.86%. The index ended above 49,500 mark, whereas the small cap index gained as much as 0.69% and managed to close above 16,100 mark. Despite today's pullback, the week was still nothing to write home about. Nifty witnessed one of its worst weeks in 2024. In fact, its second worst week so far in 2024, and it's also the biggest weekly decline in the 2 months. The last time we fell almost 2%, and I'm talking about Nifty here, was back in March. Remember, this was the time when the regulator red flagged and said that there was froth building up in the broader markets, which pretty much led to a 1,000 point fall. Since then, this is the worst weekly fall we have seen. Nifty has given up almost 2%. It's down 1.87% in this week. Bank Nifty, the damage over there is equivalent. It's fallen 1.84% as well. Mid-cap and the small-cap space, they have underperformed, and both indices are down about 3 to 5%. The mid-cap index is down about 3% for the week gone by, and the small-cap index has fallen as much as 5%. Joining us on the show now to share his views on the market is Amit Gupta, founder at Fintrek Capital. Sir, thank you for joining us here on News 9. First of all, Nifty is back in the black. We have managed to close above 22,000 mark, after a gap of one session. But, the markets have corrected significantly over the course of last 5 sessions. It's still down by about 700 points. What's your sense of things now? Is today's pullback just that, a pullback or perhaps a dead cat bounce, or do you think that since 22,000 is conquered, bulls perhaps are on a better footing now?
Yeah, hi Suyash, thank you for having me. No, I believe we had a sort of a technical support at 21,950, so it's more of a dead cat bounce as such. We have events, lined up. The earning season is on. Almost 150 Nifty 500 companies have declared results. About 30 Nifty 50 companies have declared results. On top of that, we have now elections also. There are 3 rounds are done, 4 more to go. So my sense is there are a lot of events, and markets may not take a particular direction in a one, either on the bearish side or on the bullish side. We can have a sort of a consolidated couple of more weeks before we pick the one direction on either side. So till now, the basic support levels are holding up. But we have to see how the market reacts going forward into the main event.
All right, and so I mean, to ask the question, why did we even witness this 700, 800 point crash in the first place? Because at least in the last few months, whenever the market would see a significant correction, it would be on the back of global headwinds. It's not the case this time around. Global cues have been rather healthy in the last 4-5 sessions. Why are we witnessing this significant cut in the market? Is it because of the election season, the low voter turnout, which is making investors jittery?
No, I don't read too much into the low voter account. I mean, these are good explanations to have, or good headlines to have. The fact of the matter is that the earnings have been sort of a little subpar. If you look at the Nifty 500 companies which have declared results till Wednesday of this week, and if you exclude BFSI and commodities pack out of that, Nifty 500 universe, then the earning growth is only 6%. If you include the same parameters for Nifty, then the growth is about 13%. So I think the main trigger here is the earnings and not so much elections. The election is creating the volatility in the markets, or the expectations is creating the volatility, because FIs don't want to be very heavy going into the markets, whereas we are seeing retail and prop desk being long on the index. So I would concentrate more on the earnings rather than elections, at least for the next 10 days or so. And then when we get towards the last phase and the final election result, then those headlines or the movement of the indices will dominate. But at this point of time, if you exclude the BFSI vertical and the metal mining companies, then the growth is about 6% only.
All right, and I mean, you say that the investors are not looking at elections per se, at least for now. The focus is on earnings season. Then how do we explain this 2 billion exodus from the equity markets by foreign institutional investors? They have been selling incessantly, but 2 billion in just a matter of 5-6 sessions, the number is a little too much, won't you say?
No, I mean, again, it is not that FIs are selling just now. If you look at the last 1 year performance, apart from let's say February and March, they have been selling quite consistently, and it's only because of the domestic flows which we have, either through the SIP book or through EPFO or through the NPS, that the markets have been holding up pretty well, despite that FI is selling. Having said that, we also need to understand that the rate interest differential between US and India, that is going to sustain for quite some time.
Right.
If you're getting 5% in the US, then FIs have less incentive to invest into India at that point of time. So I think it's a both a interest rate call and a little bit of positioning ahead of the elections here.
Right.
Also, there has been a lot of inflows going into the China market since the start of the year, and because we have been expensive at least at the headlines level in a lot of sectors or a lot of heavyweight sectors, then we are seeing a shift where these FIs are selling India and buying China.
Right, and you actually made a very good point over there, sir, that the bond yields in the US, they are so high, and perhaps that is pretty much eating out the differential or the spread between the 10-year here and the 10-year in the US. Earlier, I remember pre-COVID it used to be around 4 to 5%. Right now the differential is pretty much half of it. So that could be perhaps one of the reasons why FIIs are on the sidelines, because they're simply not being compensated enough for the extra risk that they are taking. But on that note, let's take a short break. Amit Gupta, please stay with us, as we have plenty to discuss with you on the other side.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching Last Stick here on News 9, and Akshaya Tritiya, a significant spring festival for the Hindu and Jain communities, is being celebrated across the country today. Buying precious assets including gold on this day has cultural significance. If you had, by the way, bought gold during the previous year's Akshaya Tritiya, your investment would have surged by nearly 16%. Also, gold prices, I mean, look at how they are going in 2024. They are on a tear actually. They have surged by about 16% as well for 2024. And it has the demand for the yellow metal has surged on the on the back of the economic uncertainties and rising inflations that is plaguing global economies. Amit, I'll come to you. Gold has outperformed Nifty so far in 2024. It has given returns of close to 15-16%, whereas Nifty has surged only by about 1.5 to 2%. And gold, again, it's very close to its record high. So traditions and customs aside, does it really make sense to add gold in one's portfolio at current levels? If so, what percentage would you allocate to the precious metal?
Actually, we were a little bullish towards the end of last year when it was trading around 1800, 1850. But at these prices, I'm not very comfortable adding more to gold allocation. The recent high of about 2450, that could stay for some time. The best reasons of the gold price higher, whether it was Fed, which would start easing its monetary policy, or whether it is global central banks continuous buying of gold, including RBI. Those factors are sort of on a declining path. There is still an uncertain global environment. We are still not out of the woods. Ukraine, Russia, or the Israel, Palestine. But my sense is that, the upside from gold here could be limited. So, if anybody has to really buy, we are not recommending it. But if someone is really have to buy, then for religious purposes or for festive purposes, then they should probably spread it out, do a little bit of investment now and then do a sip over the next 1 year. But at these levels, fresh positions, I'm not very sure about it, because our medium to long term outlook on gold still remains quite negative.
Medium to long term outlook for gold, short term outlook for gold, pardon me, remains on the negative side. Remember, gold has surged quite a lot in the last few months. In fact, in 2024 alone, it has risen by close to 15%. And I think one of the reasons why gold was rising also was because of the fact that a lot of us were expecting the Fed to cut interest rates. And remember, gold is not an interest bearing asset, as Amit also pointed out. So perhaps when bond yield, when interest rates are higher, it makes your fixed income assets more attractive for your investors and perhaps take away the attractiveness of the precious metals. And since the expectation is that the interest rates will remain higher for longer, perhaps gold loses some of its sheen. But it's not just gold that is shining. Since last Akshaya Tritiya, equity markets have produced 4 multi-bagger stocks in the jewelry segment. During this period, it has not only managed to outperform the yellow metal, but Nifty, which has yielded returns of about 27%. Stocks like Sky Gold, Kalyan Jewelers and PC Jewelers has surged somewhere about 300 to 300% since last Akshaya Tritiya. Amit, I'll come to you. Anything that you like in this space, in this segment, jewelry segment?
We don't own any jewelry stocks, but we had researched a little bit about Senco Gold, which is a Calcutta-based jewelry company. There are a couple of more IPOs lined up in this financial year. That is also expected. So let's see how that goes. But gold has delivered about 16% return. So it's very very obvious that a lot of these jewelry stocks would also do well. A few of the new listings were also there, like Sky Gold, Radhika Jewel Tech, etc. So in these companies there is a little bit more excitement when these are listed. The float is a little bit less, and the business models need to be yet to be proved. But out of these, I think Senco Gold is something which we found a little interesting, and even the business growth wise, it was delivering 20% plus. But before we could actually complete our research, the stock really ran away, so we did not chase it at that point of time. But yeah, we don't have an active recommendation on any of the gold jewelry stocks.
All right, that's a verdict on jewelry stocks, but we are, remember, in the middle of the 4th quarter earnings season, and Cipla has come out with its numbers. The pharma major has beaten street expectations on the profitability front. However, revenue from operations, operating income and margins, they have missed expectations. Cipla reported consolidated net profit of 939 crore for the quarter gone by, marking a 79% jump from the year ago period. The street was expecting the figure to come in somewhere around the 900 crore mark. Revenue from operations surged by 7.4% YOY to 6,163 crore. The number was again marginally ahead below the street expectation, which pegged it to come at around 6,224 crore. At the operating level, EBITDA, which is earnings before interest, tax, depreciation and amortization, rose 12% YOY to 1,316 crore, and margins stood at 21.3%, which is about 80 basis points higher from the same period last fiscal. And according to the company, margin decline in Q4 was due to seasonality effect, and this decline is on a quarter-on-quarter basis, not on a year-on-year basis. The company has, by the way, also declared its highest ever dividend of rupees 13 per share, and the record date of payment of final dividend has been set at August 2nd. Now, shares of the company have reacted negatively to the results, as it slipped in the red and ultimately settled there with a cut of about 1.5% or so. Amit, I'll come to you. What's your assessment of Cipla's Q4 report card, and what should investors do now with the stock post the Q4 results?
I think the net profit was a little higher than most of the street estimates. It was up about 80% or so. But it is worth noting that the sharp spike in the Cipla bottom line for this quarter, Q4, that was mainly due to a low base, as last year the company's net profit was impacted by a one-time impairment charges of about 180 crores. So that's why the bottom line has seen a little bit of a sharp. The revenue was dragged a little lower by the divestment of one of their subsidiaries based in Uganda, the Quality Chemical Industries. Apart from that, I think the Indian sales generally have suffered from a soft seasonal demands. Usually the January to March quarter, it is a little soft for the consumer business. So they have reported only 7% year-on-year increase in the revenue.
Right.
But apart from that, I don't see too much of negative things or negative pointers in the result.
All right.
They've filed for few more drugs which can be good for the next 2 to 3 years. The company plans to launch 4 peptide assets also in FY25. So it
Right.
looks good, but I would say, valuation wise, it's pretty much full at this price of about 1350.
All right, but Amit, hold that thought. It's time for a short break. On the other side, we'll discuss of the earnings of Tata Motors, which has just come out during the show. So stay tuned for that. We'll discuss Tata Motors in just a short while from now.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching Last Week here on News 9, and the numbers as we speak of Tata Motors have finally come out, and the first print, at least, it looks like the company has had a tremendous quarter in Q4. The profits, they have marked a threefold jump. Net profit for the quarter gone by came in at 17,407 crore, which is about 222% higher from the year ago period when it stood at about 5,400 crore. Revenue was pretty much in line with what the street was expecting. The street had pegged the figure to come in at around 1.2 lakh crore, and that's exactly where we are. But on a year-on-year basis, Tata Motors has revenue from operations have jumped by about 14.3%. EBITDA, which is earnings before interest, tax, depreciation and amortization, has jumped by 33%. Again, very impressive numbers from Tata Motors. The EBITDA figure comes in at around 17,035 crore versus 12,810 crore in the year ago period, and margin have expanded by about 210 basis points from about 12.1% in Q4 of FY23 versus 14.2% now. And I mean, I think Tata Motors, the stock overall has been a tremendous wealth creator as well. It has turned multi-bagger on a 1 year basis, having surged over 100%. So multi-bagger stock is one which doubles your money essentially over a course of 1 year. So if had you invested 10,000 rupees, let's say, your money would have, at least in case of Tata Motors, would have doubled pretty much to 20,000 or more, because they have returned, investors or improved investors well by about 105% in a matter of 1 year. On a 6-month basis, the stock has surged almost 61%, and again, in the run-up to the earnings, the stock ended about 1.5% higher, and in this 5-day period when the market was correcting, Nifty was falling by about 2%, Tata Motors was an outlier and having surged by about almost 3%. And Amit, I'll come to you. The numbers, at least, the first print, it looks the numbers are really good. Profit has pretty much jumped threefolds. What's your take on Tata Motors, and is it a stock that one can look at even after this tremendous surge in prices that we have witnessed in the past 12-15 months, sir?
No, I think the result is pretty good. It has delivered its highest ever revenues, profits, and even the free cash flows are the highest. The Indian business is now debt free, and they are on track to become debt free even on a consolidated basis in FY25. So I think one should look at Tata Motors. Most probably there will be a little bit of a gap up on Monday morning, and if it sustains above 160, 170, then I think there is a chance of a 7 to 10% rally even on the even from these current levels. The most pleasing thing I would see very quickly in the result is the fact that they've now crossed 150,000 cumulative EV production. They have sold almost 74,000 EVs during the last financial year, which is almost 48% higher as compared to the FY23. The passenger vehicle is again doing very well. The commercial vehicle space is a little, a little bit on the back foot, but that is understandable because of the elections. Usually, the order book of CVs goes a little soft during the as we approach the elections during the elections. But I think the overall numbers, market should not be market should be happy about it and not very disappointed.
All right, market should be happy about the numbers, as plenty to celebrate from the Q4 print of Tata Motors. Initial print does look fantastic, a 222.3% jump in net profit. That's a threefold jump in net profits alone. Revenue came in pretty much in line with what the street was expecting, but about 14% higher from the year ago period. EBITDA jumped by 33%, and again look at how the stock has moved in the last 12-15 months. In the course of 1 year, it has turned a multi-bagger, giving returns of almost 105% for the investors. But Amit sir, thank you for joining us and giving us time here on News 9. Always a pleasure speaking with you.
Thank you, Suresh, for having me.
All right, that's all we have in this edition of Last Take. Thank you for watching. We'll see you on Monday at 9:45 a.m. on First Take. Keep an eye out on Nifty. 22,000 should be held. If that breaks, perhaps bears take over once again. But 22,000 is where we are hoping that the market could continue to fortify and perhaps move higher from there on. So we'll see you on Monday at 9:45 on First AM. Thank you for watching.
Golf as a game, it is closest to the game that you call life.
You've got to use your mind. You cannot lose it.
The sharpest person is one who understands his limitations.
खुद ही को कर बुलंद इतना कि खुदा बंदे से पूछे कि तेरी रजा क्या है.
You might have a bad break after a good shot, you might have a good break after a bad shot, but the fact remains, you got to play the ball from where it lies.
Watch Jeev Milkha Singh on Duologue with Barun Das, streaming on News 9+.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers